Pilgrims Pride Corporation, a financial analysis. The executive summary. This financial analysis will give an insight into the market performance Pilgrims Pride Corporation employs against its competitors. It will include a historical account of the company's beginnings as well as the background information pertaining to the company's ventures and global market reach. It will also include an in-depth financial analysis pertaining to different segments of financial business analysis as well as metrics that reflect Pilgrims Pride's market performance. All of this will be in comparison to competitors in the form of industry averages. The final portion of the financial analysis will be my personal recommendation based on my research and knowledge of finance. It will be the most biased portion of the project, but arguably the most important based on the summation of facts. Company background. Pilgrims Pride was originally founded in 1946 as a feed and seed store by Aubrey Pilgrim and Pat Johns, as well as the now late Bo Pilgrim, later on to supply farmers in the surrounding rural areas. They were one of the first vertically integrated agricultural businesses, proving to be a major success for them. The business model was to sell 100 baby chicks along with feed sacks to boost sales, and it worked out quite well. Today, they now have global operations in the U.S., Mexico, Puerto Rico, Brazil, and Europe, employing 58,000 workers that provide 133 million servings of poultry and pork each day. The liquidity of a company can be defined as a notion of the firm being able to repay all current obligations without disrupting the normal course of business. Here we measure Pilgrims Pride by three calculations: the current ratio, the quick ratio, and the amount of working capital on hand. We begin with the current ratio. We find this by dividing current assets by current liabilities. Current ratio for 2019 was 1.58 and 1.50 in 2020. Next, the quick ratio. We find this by subtracting inventory from the current assets, then dividing it by current liabilities. The quick ratio for Pilgrims Pride in 2019 was 0.74 and 0.80 in 2020. And last, the working capital. We find this by subtracting current liabilities from current assets. Working capital for Pilgrims Pride in 2019 was $950,081,000. $965,130,000 in 2020. That's an increase of $15 million in working capital. After comparing Pilgrims Pride liquidity ratios against the industry averages, we find that they are lower, indicating that Pilgrims Pride is illiquid despite an increase in working capital of about $15 million from years 2019 to 2020. The next segment of ratio analysis we will look at is solvency. The solvency of a firm is the ability to repay all debts by selling assets in the case of potential business failure. First, we will calculate the debt-to-asset ratio. Divide total liabilities by total assets. The debt-asset ratio for Pilgrims Pride in 2019 was 0.64 and 0.66 in 2020. Next, the equity-asset ratio. Divide the owner's equity by total assets. The equity-asset ratio for Pilgrims Pride in 2019 was 0.36 and 0.34 in 2020. And finally, the debt-to-equity ratio. Divide the total liabilities by owner's equity. The debt-to-equity ratio in 2019 was 1.81 and 1.91 in 2020. In conclusion, compared to industry averages, we can assume that Pilgrims Pride has more debt financing than equity financing, and also that Pilgrims Pride is insolvent, but less so when compared to the rest of the industry. The third segment of financial analysis is activity. The activity of a company refers to the firm's ability to use its asset base to generate top-line sales or revenue and manage inventory. We will also analyze the activity like we did with solvency through three ratios. First, we begin with total asset turnover. Divide sales by total assets. Total asset turnover ratio for Pilgrims Pride in 2019 was 1.61 and 1.62 in 2020. Next, fixed asset turnover. Divide sales by the total asset minus the current assets. Fixed asset turnover ratio for Pilgrims Pride in 2019 was 2.53 and 2.64 in 2020. And last, total inventory turnover. Divide the cost of goods sold by the average annual inventory. Total inventory ratio for Pilgrims Pride was 8.24 days average compared to 12.62, which is the industry average. In conclusion, the company was not very active when compared to industry competition. Total asset turnover and fixed asset turnover revealed that they had been struggling in generating sales, and an inventory turnover less than the industry average may indicate that they are preventing themselves from risking too much tied up capital to be in the form of inventory. Profitability, the last segment of ratio analysis. The financial profitability of a company in the most basic terms is the ability of a company to generate income from business resources. We will analyze this through 2% margins and 2 ratio calculations. First, we start with the gross profit margin. Subtract the cost of goods sold from the sales and divide it again by the sales. Gross profit margin for Pilgrims Pride in 2019 was 9.42% and 6.62% in 2020. Next, the net profit margin, which is the net income divided by the sales. Net profit margin in 2019 was 4% and in 2020 0.78%. Then we find the return on asset ratio. Divide the net income by total assets. Return on asset ratio in 2019 was 6.42% and 1.27% in 2020. That's a 5.15% reduction. And finally, we find the return on investment ratio, which is the net income divided by the owner's equity. Return on investment ratio in 2019 was 120.01%. In 2020, it was 15.99%. In conclusion, the profitability of Pilgrims Pride is very low. They have experienced drastic decreases in financial returns from 2019 to 2020. Industry averages represent much higher percentages, resulting in large underperformance against the competition within the market. An analysis of the market-based performance from Pilgrims Pride will show us the capital market performance for the company under ticker symbol PPC. We can begin to gather our metrics. We first find that the price to earnings ratio is 212.20, indicating that is either an overvaluation or investors expect future growth. We then see the beta of 1.13, indicating that Pilgrim's stock is more volatile than the market index. Then, analyzing the market cap, we see that it is 6.663 billion. This is large, and this is also known historically for companies that produce quality goods. And finally, the economic value added shows a negative $79,521,590, meaning a devaluation of funds for the company. Looking back on data and research, I will make an educated decision based on the facts and evidence I've gathered throughout this analysis, starting with liquidity. The company is illiquid and underperforming competition. Solvency. The company is solvent but has more debt financing than equity financing. Activity. The company is struggling in generating sales from total assets and fixed assets. The inventory is low, reflecting sales or to prevent from tied up capital. Profitability. The company shows a decrease in company returns, especially a 104% decrease in return on investments. Market-based performance. The stock price is volatile, overvalued, and has negative economic value. Avoid investments into Pilgrim's Pride for now until we see a rebound in performance, where then it would not be unwise to buy low and hold for a longer period of time.